Alrighty, folks. Last week, I introduced you to a brand new guest and team at Steadily, Darren, the CEO. Looks like we hit one. We got over 100 people reaching out to Steadily for a quote to get feedback, which I think is awesome. We will definitely talk more and more about that. But I think we should go to the other side of having insurance. As someone who has owned rental properties for 20 plus years, I have had 3 fire claims and 1 water claim. So I thought we should just say, hey, God forbid something happens. What does an insurance claim look like? Does somebody go to Steadily and file a claim there? Where do they go? Again, Darren, welcome to the show. Thank you for being here.
It's good to be back. The short
Oh,
answer is at Steadily, when you have a claim, you either go to the website and start the process there, or you give us a call. Either way, what's going to happen is the claims team is going to make an initial guess at how complicated your claim is going to be. If the damage is located to just one room, so relatively simple, what they're probably going to do is send you a link to your mobile phone. You're going to open that up and it's going to ask you for access to your camera. And then it's going to guide you to walk in a slow circle around the room. And it's going to take about 60 photos from all different angles around the room, use that to build a 3D model. And based on that, a claims adjuster will look at that 3D rendering of the room and oftentimes can get the claim adjusted and the payment out to you within 4 days. That's the target. If it's a
4 days.
multi-room, 4 days,
4 days.
that's the average for the digital claims.
Damn. All right.
If the problem is multi-room, like in your case with the fire,
Mm-hmm.
it's going to scale to how big the damage is. Because if it's a big fire, then the fire department has to come out. There has to be an
Yep.
arson investigation,
Yep.
things like that. So it's going to take longer. The median time from the time a claim is filed until we've paid the claim is currently 11 days. For a big fire claim, that might be 2 to 3 weeks, but we're
Mhm.
always benchmarking ourselves against our target, which is a week.
Yeah, I think the audience needs to hear that because a lot of people heard our introduction we called last week and maybe just assumed that Steadly's kind of the front end to the process where I can help you get better, faster, cheaper. But hey, if you have a problem, you got to deal with some other insurance broker who maybe, bought the paper or whatever. And what you're telling me is no, you've spent a lot of time trying to automate and streamline, i.e., go to the website, i.e., stand in a room and turn around in a small circle. So again, if they're gonna work with Steadily, they're gonna work with Steadily on a claim as well.
There are two ways that you can get a policy through Steadily. Way number one is that Steadily is the underwriter, Steadily is the claims adjuster. We are with you from the very beginning to the very end, all the way through. And that is available in 45 different states, so almost the entire country, but not every property.
Okay.
For all the other properties, we're then going to reach out to one of 45 different carriers that we work with and try to get you a policy. Because the reason that we set up Steadily the way we did is we wanted to be able to say yes to everybody.
Got it.
And so if we could only offer you a policy under limited circumstances, we'd have to turn away a lot of people. And so
Right.
by having the combination of Steadily end to end plus Steadily agency, that allows us to say yes to the maximum number of people.
And again, that's not something you hide, right? Somebody comes in for a quote, Steadily end to end, they know it, they feel it, they see it. If you have to go to, I'll call it a third party, I don't know if that's the right lingo, you're going
Mhm.
to tell them up front the paper is going to say a different name. You'll make that clear, transparent day one.
It's going to be super obvious because it's going to be a very big logo of somebody that isn't
I
Steadily
was going to say
that
Steadily
will be
right
on the
there.
proposal.
And just to play that story out, like, what's one of the other 45 providers, just so I don't just make up a name? What's one of them?
American Modern would be a big one. They
Okay.
do a ton of landlord insurance.
All right. So let's say, so again, they bring you somebody in my world, my orbit comes to you for whatever reason, steadily can't do it. You're going to go to American Modern. They're going to say it. They're going to get back a quote, American Modern. So if they have a problem, they're calling American Model, correct?
That's correct.
Yeah. So again, this is all about being transparent and upfront. If you were going to look at your business, I don't know how you do it monthly, quarterly, or year, what percent is end to end steadily? And if you can't say, give me a ballpark. Yeah. Can you answer that or got a guess?
Yeah, that's not a secret at all. It's two-thirds end-to-end us
Oh,
and
wow.
one-third with other folks outside. And we think that over the long term, it's going to stabilize around that level
Hmm.
because even though Steadily is growing very rapidly, the number of markets in which we can operate takes time to grow. And so we believe
That makes
that
sense.
that blend of in-house versus third party is going to continue to be a good model for the long term.
I like it. I like it. Well, a couple of things that I got back from my audience. Obviously, I've talked about Steadily a bunch in my daily financial news. Our discussion last week, I posted it on Twitter or X, is people were quite impressed that most everybody that I communicated with had a quote back within 24 hours. I can only remember one or two people having to have a phone call to get some finer stuff out. So your promise of fast was well done, sir. Well done. So the team was operating extremely well. We did get a couple
Appreciate
of
that.
comments that I just want to talk about because I think it's really cool and shows the flexibility. I remember one of the first one was, "Hey, I tried to get a quote for a property in Florida," and the commenter was like, "Hey, they denied it or they couldn't fulfill it." Well, the my my person was like, "I don't get it. They don't cover Florida." And one of your team members responded, I forget his name. I wish I remembered. I want to say Chris, but that's probably not right. He basically replied with, "Hey, anytime there's an actively named storm coming towards Florida, we don't issue new claims. That's like an industry standard. But call us back. I'm sure we can help you now." It's like sometimes there's these subtle things that we, the novice real estate investor, don't understand.
It is called a moratorium. And yes, anytime that a wildfire is starting,
Yep.
a hurricane is depicted, a tornado is called out. There's going to be an underwriter that's going to go into the system at every insurance carrier across the country,
And click.
and they're going to take their mouse tool and they're going to draw a big radius around a map of the U.S. of wherever that's in danger and say, don't write any business in this region until, and then they'll pick some date like a day after the storm is planned
Yeah.
to end.
And that makes perfect sense. That's just the insurance company protecting themselves, right? We probably should clean up that communication instead of saying, "Hey, we don't write, comma, name storm." That was Helene, I think, at that point. Again, sometimes we have to educate the new folks. And then I had a bunch of questions. Even myself, my wife Olivia asked. Obviously, we own a bunch of policies. We're having Steadily quote several of them, but also all of our policies have umbrella policies. So I said, you know what? I have no idea if they do umbrella policies. So I said, I'll ask Darren next call. So here we go. Do you do umbrellas or just the underlying property and liability?
We do umbrellas. The caveat is going to be that an umbrella provider is going to want to make sure
Mm-hmm.
that the layer of insurance underneath that umbrella is high quality. Because if you think
Right.
about what's happening, when you buy an umbrella policy, it's a different insurance company. And they're
Correct.
coming in and they're saying, I'm going to take all of the losses that happen above, let's
Above
say, $1
some
million,
number. Right. Mm-hmm.
and I will pay up to $2 million or $3 million, maybe even $5 million.
Correct.
And the idea is that that happens very rarely. It should
Mm-hmm.
be a low frequency but high severity action,
Yes.
right? Anytime that the umbrella gets penetrated, you
It's
know
a
you're
big
into the
thing.
millions. Like it's a
Right.
big deal.
It's a
And
big
so they
deal.
want to make sure that the insurance that's below them in that stack is high quality.
Yep.
And so they're going to ask you to provide the policy information for who you have in that stack. And they're going to want to look at, let's say, is it an admitted carrier
Mm-hmm.
or a non-admitted carrier, which might not be a distinction that your audience has thought a lot about, but that's going to matter to the umbrella provider.
Absolutely. And that's something that Olivia and I deal with all the time. When we started out, we had $1 million. As we grew, it's three, and now it's five. Because again, the more you have to lose, you are playing for that high, low frequency, high, cover everything basis. And the really crazy thing to understand is the most dangerous things we do all the time, even with all the property we own, is simply drive our car. Right. That's when you look at my day or my month or my year, that's the thing that could really, get us. Um,
So I'm always hesitant to recommend to folks like, oh, you should buy more insurance because that feels like, oh, that's a thing that a
Talking your
guy who
book.
runs an insurance carrier would say.
Yeah.
But so don't trust me. Go and Google and
Mhm.
just ask the internet, how much coverage should you have? And the smart answers are going to be, you should be protected up to your net worth.
Correct.
So if your net worth is $500,000, you don't need an umbrella policy.
Right.
But
Because
if
the
your net
underlying,
worth
yeah.
is $5
Mhm.
million, you need $5 million of protection.
Yep.
Because when a plaintiff's attorney looks at you as a target, they're going to evaluate how juicy does this target look.
Yeah. Is
And
it
if
worth
you're
the
sitting,
squeeze? Yeah.
is it worth the squeeze? And if you're sitting on $5 million in assets that they believe they can go after, well, guess what? You just moved to the top of their list. And so that's when you want more protection from insurance to cover you for your net worth.
Absolutely. Absolutely. Again, some of the things that I've really enjoyed about Steadily is, to me, it's only been a couple of conversations, but your team has done what you said they would, right? Again, I asked my audience to reach out, give quotes, and has performed. I never thought everybody would get lower rates, and not everybody did, which is fine, right? That's you can't be the lowest provider always. But I really did love the speed, the ease of using it. I got a lot of feedback from other people in my orbit saying, "Hey, I already use Steadily. Glad you guys are talking to them." So you have a good reputation out there. So congrats for that. I'm sure it's been fun to build that. Um, but when you looked at all the leads that came in last week, or your team looked at them, what was kind of your initial feedback on the one rental at a time audience?
These are folks who know what they're doing. It was awesome to get the inquiries because they're out there doing a combination of, I have a policy and I want to see if I can beat the rate.
Yep.
I have a new property that I'm considering buying and I want to see what it's going to cost to cover it. And that's what we're here to serve. We
Great.
got a lot of leads in a very short period of time, and that's a good problem to have.
Yeah.
And so we very much appreciate all the outreach that we got there.
Yeah, one of the things that I loved about it is obviously one rental at a time is obviously a very much a build slowly, right? One at a time. But my community is full of doers, which I really appreciated. And to see all those people reach out in 24 or 48 hours was made me feel good. I think everybody in my orbit should reach out to Steadily and just see, even if you already have a policy, just see if they're not cheaper, don't move. It's very simple. Uh, but what I've noticed in the portfolios is if you have more than one property, what I have seen from people is the chances of Steadily being better, it goes up. It's the hey, I only have one so far. Usually, hey, I'm with State Farms or Farmers or whatever. Their whole combined auto discounting stuff makes it cheaper. So something I saw again just in 7 days of doing this is if you have 2 or 3 or 4 units or more, Steadily is has a very good chance at being cheaper. I'm very happy to hear about the umbrellas. I did not know that. My wife even asked. Shame on me for not asking last week. Um, but yeah, I like what we're doing here, and I think everybody who has a policy should ask. And then more importantly, if you're early and you don't own anything yet, one of the things you have to know is what does it cost. And I think by submitting online, just putting in the address, it just gets you more and more familiar with the process. So it's pretty cool. So thank you for that.
You're welcome. Let's talk about Florida for a few seconds since you brought up the
Please.
questions that folks had about that. If folks have been following the Florida insurance market, one of the
Oh,
names that they're going to hear very early is Citizens.
mm-hmm.
Citizens is the insurance company of last resort run by the state of Florida. And at its peak, it was insuring one in five properties in
Wow.
Florida, 20% market share.
20%. Wow.
It moves up and down according to the cycles, but right now it's very much on the up
It's
part of
going
that
up.
cycle.
It's going up.
And what that basically tells you is that there is not enough supply of unsubsidized insurance companies operating in the Florida market.
Right.
Put differently, people have found that they can pay below market insurance prices if they go to Citizens versus going to a private insurer. And Citizens is in the very weird position where, as a business, they want to die.
Hmm.
Citizens is always trying to shrink its book. it wants to have fewer subscribers and fewer policyholders. Like it's a very strange business. It also happens to hemorrhage money, and certainly in 2024, it will lose a lot of money.
Oh
But
yeah,
the
billions.
the odd recommendation that I'm going to make to folks is if you can get a citizens policy in Florida, you should get it because you're going to pay so much less for citizens than the private markets are going to charge you because citizens is literally not charging enough for
It's
their
yes,
insurance
not
policy.
it's not for profit, right? So their
Right.
incentives are kind of perverse. That is
It is a huge
wild.
money loser. And as a result of that, if you buy another type of insurance that's not homeowners insurance in Florida, there will be a surcharge. Let's say you go and buy an auto insurance policy. There will be a surcharge often onto your bill for that insurance to subsidize all of the losses that are happening for citizens homeowners. So it's probably not going to last forever,
Sure.
but take advantage of it if you can because it's free real estate, as they
Yeah,
like to
yeah,
say.
it's wild to think about. One of the things, again, just making a prediction, they're gonna lose a lot of money in 24, and
They
citizen
are.
rates are going to be going up in 25 and 26. It's funny. I think about California. I think California's plan is called California Fair Plan. Kind of
It
again,
is the fair
last
plan. Yep.
yeah, last line of defense, if you will. But I guess the thing in California, and I don't know Florida, in California, there's limits on how much insurance companies can raise premiums, which meant they were leaving the states in droves, and hence the fair plan was becoming the only option. Um, it's
Yeah, I
it's wild to
will.
think about that.
Florida and California have ended up in what look like similar places for very different reasons.
Mm,
So California's problems are a result of a proposition that was put
mhm.
on the ballot way back in the 80s, if memory serves. And and that effectively changed the Constitution of California. It's a prop, so it's put in by voters, and so a legislator can't change it without another vote from
Right.
citizens. And what it effectively said is the Department of Insurance of California has to pre-approve any rate filing, anything that an insurance company wants to use in California. Well, there's nothing intrinsically wrong with that, as long as the Department of Insurance is fast
Yeah,
to
it's the
like
cycle
approve
time.
these
Yeah.
changes. Yeah, it's the cycle time. And so the cycle time in California became 3 years.
Oh,
So an insurance carrier would say, hey, there was a large wildfire in the Tahoe area. I just lost $560 million. I need to raise my rates so that I can stay in business and
right.
still offer insurance in Tahoe. And there would be a cycle time of 3 years. Meanwhile, the insurance carrier is continuing to lose money every year. And so
Right.
after several years of this, the carriers were like,
I'm
can't
out.
wait anymore. I have to leave. And so Allstate and State Farm and everybody just picked up ship and left. Not
Yep.
because they don't like the California market, but by law, they could not charge enough to pay for all the claims. And so
Hmm.
eventually they literally ran out of money to pay claims in those markets.
Yep.
And so the solution in California is different than the solution for Florida. The solution in California is just make your cycle time
Yeah.
a month.
Can
And
we yeah,
then
can we go 90 days or less, please? Come on.
yeah,
Shouldn't be that hard.
just approve the changes and like you're good to go. And the insurers would come back.
Yeah. Yeah, it'll be interesting. I had heard there's something going in to kind of make that, we're going to go faster. I believe it when I see it. Uh, yeah, as somebody who's lived in California for 50 years, I'm very much let me see it happen. What are some other things? Again, a lot of real estate investors on this channel. A lot of people should be reaching out steadily to get quotes. Again, non-owner occupied, correct?
Non-owner occupied. We are a landlord insurance company, to use the old phrase.
Condos, townhouses, as long as they're rentals, doesn't matter.
All of the above.
How about mobile homes?
Not mobile homes. Those we need to place through a third-party carrier. So to the question that you asked earlier about when we can provide an instant price and when we can't, if you bring us a mobile home, we'll need to go and look outside.
Price that up. There you go. Anything else? How about midterm rentals, short-term rentals?
We do 20 to 25% of the policies that we write are short and midterm rentals, so we love them.
Yeah, again, these are things. Very important. So again, folks, if you want to get a quote, if you own something, I'll put a link below. Click it, please, please. If you're going to click the link, give me your feedback. Did you get the quote? Did you like it? What experience? I'm here to really make sure that Steadily is providing value to my community. I've spent 5 or 6 years building this community. Anybody that I bring on, I want to make sure is adding value. So please leave comments below. Darren, where should we send them?
Steadily.com.
There you go. Steadily.com, folks. Take care, Darren. You're amazing. Keep it up. Later.